Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, CanAlaska uranium dropped sharply during the past few days. Is there bad news on the uranium or diamond front?
Well, on the uranium front, there hasn't been any good news for a long time. The spot price dropped as low as $18 in the past few weeks. It's currently hovering at the $20 per pound price. The long-term contract price, which is what most uranium production gets sold at, it started the year off at $44 a pound, but in November it was down to $33 per pound. At that long-term price, almost no deposit, even these high-grade ones in the Athabasca Basin, are worth developing. So uranium has been one of the most miserable commodities out there. Not only has it not done nothing on the upside, it has actually gone down to new lows during the past year. Now, but that isn't really what's troubling CanAlaska. It's still waiting for Cameco to decide whether or not it has a budget to resume work on the West MacArthur project, which is just west of Cameco's Fox Lake discovery. They drilled several holes this year on the main conductor, but did not intersect anything particularly interesting. So we'll find out at the end of by the end of January what sort of budget Cameco has for this sort of thing. Now, Denison, which is a 75% farm-in partner on the Moon South project, has conducted geophysical surveys this winter when the ground is frozen, in anticipation of going in there and drilling in the summer. So there's possibly more work on the uranium front going there. So apart from people wondering, well, is the Trump victory going to do something for uranium? It's not really going to do anything, because even if the United States decides it wants to build nuclear reactors again, it's like a 10-year development cycle. The main story is still that the Chinese reactors are gradually coming on stream, and eventually their total demand will absorb all the supply, all the stockpiles that are sitting there in Japan and in Germany. And of course, another problem for the uranium market is that the suppliers of the fuel, because they're now dealing with less demand, they are able to spin their natural uranium in their centrifuges longer and recover more of the uranium-235, which is actually the fuel. So that's actually increasing supply for the nuclear power plants without mining additional uranium. So the uranium is not the source of CanAlaska's problem. The real problem is that De Beers on December 23rd decided not to continue work on the Athabasca Kimberlite project. And it was the Athabasca Kimberlite project which earlier this year caught the market's imagination. CanAlaska, and we've talked about it a fair bit on Discovery Watch, CanAlaska identified these magnetic anomalies from a government survey, went and staked them as little bullseye-type targets, presented them to De Beers. De Beers was intrigued. They do sit on the Ray Craton, which has potential to have diamondiferous pipes, and none have actually been discovered yet. But it is a cool, deep craton, so it is the right setting for it. They did a fairly good deal that required aggressive work by De Beers, spending $1.4 million by, I think it was like the first quarter of next year. They collected samples, and they drilled 7 targets in the southern part of the property, which were accessible during the summer. And they came up with no kimberlites. They did find magnetic sand deposits in what turned out to be depressions in the ground, so that sort of explained some of those anomalies. But the bigger targets in the north, some of them which have a reversed polarity, these ones De Beers was supposed to start drilling in January. So it is extremely disappointing that De Beers has decided to walk away and conclude that these magnetic minerals are also likely the explanation for the anomalies in the north. I think, though, reading between the lines, one of the things that I have bugged Peter Dazzler about is these samples, that till samples and so on, near these targets that De Beers collected and shipped to South Africa, Why are we never hearing anything about whether or not they have kimberlite indicator minerals or even diamond indicator minerals? And even the news release that they put out does not address what these samples contain. So I suspect that when De Beers finished processing all these samples, there were no kimberlite indicator minerals there, so they just decided to pull the plug and assume that these northern targets are also simply going to be topographical depressions within which little pieces of magnetite and so on have accumulated, which then create a big bullseye anomaly.
Is this also bad news for the Fjordland exploration, which staked out all the land surrounding CanAlaska's bullseye anomalies?
Yes, it is bad news for Fjordland in the sense that they were hoping that if De Beers confirmed that these bullseye targets were kimberlites and even diamondiferous kimberlites, well, the nature of kimberlites is that they occur in clusters, and not every target has a prominent magnetic anomaly that can be seen with a government 400-meter spaced magnetic survey. So they figured, well, they would own all the pipes that fell outside the little postage stamp style claims that CanAlaska had staked. However, the market already pretty much pulled the plug on the play in the fall when CanAlaska reported that the initial targets had come up with mineral sands, and so Fjordland's already down at 5 cents right now. At the moment, the hope for Fjordland is its 45-55 joint venture with Serengeti Resources on the Milligan West project in central British Columbia. This property is just west of the Mount Milligan mine, which is owned by Thompson Creek, which has now been acquired by Centerra. And this is a IP anomaly that David Moore of Serengeti generated this summer. Serengeti, which has several projects on our Discovery Watch program, really likes these IP surveys which generate targets that are sulfide bodies, and the big question is always whether or not the sulfide body is also enriched with copper and possibly gold. So they will likely go back in there, possibly farm it out to Centerra because this is right next door, and eventually they will need more mill feed. So that's where Fjordland's future at the moment rests. On the plus side, CanAlaska has indicated that it is talking to other diamond parties about a possible farm-in deal. And what was bad about the original De Beers deal was it just focused on these magnetic anomalies. When you have a big new regional diamond play like that, you want to own the entire land package. So Fjordland now has a chance that if there's a third party that's interested, it will do a deal with both companies to consolidate the bullseye anomalies with the surrounding land and then do a systematic program that looks at the whole works. So we have our fingers crossed that something like that will happen and Fjordland will get some mileage out of it, and a new group that isn't so quick to dismiss these northern targets as more mineral sand, heavy mineral sand deposits takes a fresh crack at that project.
Northern Shield published results on December 22nd for the 6 holes that completed on the Sequoia project in northern Quebec. The stock dropped more than 50% on heavy volume. Just how bad was the news?
Well, the company only reported visual descriptions of the 6 holes that it drilled. And you would think, well, shouldn't we be waiting for assays? But it was the geological context of the Sequoia project which had the market pretty excited. There was not any geochemical support. And again, this is similar to the situation we have with CanAlaska. There was never any geochemical support for the geophysical anomalies. There was certainly a geological context that made sense for diamond pipes to be up there, and for these magmatic segregation type deposits like Norilsk or Voisey's Bay to be present here. But what was clear in the visuals is that no, these rocks that hosted these EM conductors that we were hoping would be massive sulfide deposits enriched in copper, nickel, and platinum group metals similar to Voisey's Bay or Norilsk. Well, in fact, that these are not the right rocks for that. There is possibility that it's a setting for a Thompson style nickel deposit, what we have in Manitoba. But the sulfides that were intersected, there was no evidence of pentlandite, so there are no expectations that we will get any nickel values. What was interesting is that they intersected various shear zones and quartz carbonate veining, and there was lots of pyrrhotite and graphite in there. That sort of explains the geophysical anomaly. But this type of geology could host gold values, and they did pick up some mild low-grade gold values in till samples. We had no idea where it actually came from. They are assaying the core, so in this sort of system, you do not necessarily see any gold. So we could have a surprise that instead of a big nickel-copper massive sulfide discovery, we have a gold discovery in an area that isn't particularly known. As far as the regional nickel anomaly in the till, it remains unexplained, and there is still the Huckleberry project farmed out to South 32, where the work will continue onwards. So the story is not over for Northern Shield, but just the violence with which the market reacted to news that disappointed the big picture expectations, it tells you that we're not yet in a market where the glass for discovery exploration is half full. We are still in a pretty much half empty type of market as far as discovery exploration is concerned.
Is there any update on Arizona Mining and its Hermosa Taylor project?
Well, when we talked several weeks about that, we had only seen the first Global Mining Observer article in which they raised the issue about a high manganese content in the concentrate, which the smelters would not be happy with. But in that article, they suggested that this whole thing was a scam. It was another Bre-X in the making. And that was, of course, completely inappropriate. Bre-X was an outright fraud. This was not at all a fraud. The company had put out news release confirming that they're aware of the manganese issue. There are absence of other penalty elements in it that make it likely that there could be a blended concentrate where a smelter takes this high manganese concentrate with low mercury and arsenic and mixes it with a low manganese but high arsenic mercury concentrate, and it's not at all a problem. It is not the sort of showstopper. Now, the online magazine in Britain retracted its article the next day when it was made apparent to them, like, this is actually total libel to suggest that this company, with people like Jim Gowan's on board and lots of credible people, that this is a fraud in the style of Bre-X. So they retracted that and then immediately put out a tamed down version of the original article, still quoting anonymous sources, suggesting that the project is worthless because there is this manganese problem and smelters don't like this problem. And the stock lurched lower. The stock exchange actually had one of its circuit breaker halted the stock to say, what is going on? And of course the company put out, no, there's nothing actually going on. We are addressing this manganese problem. It isn't a showstopper problem. But what the shorts had accomplished through this manipulative article was to basically contaminate the story by leaving in the market's mind this idea, this lingering question, is this another Bre-X? Is this thing going to evaporate on us? And this, again, it's a clear example of how fake news, just total falsehoods, are now becoming the new normal for this stuff. The company did put out several news releases in the past week, which fantastic assays, and more importantly, they are step-outs. They're very high-grade zinc values. They're right on the edge of the patented claims, drilled at angles. So this 100 to 200 million ton footprint, I think, is going to expand to be an even bigger system. And quite likely, we will see the sort of target 80 million tons that they need for a 10,000 ton per day operation, we will see them find high enough grade material to increase the potential value of the company.
John, is there any hint of legal action over the alleged libel that took place in these articles?
The company did contact the Global Mining Observer and point out that the way that article was written is a complete falsehood, and the company and this entity did withdraw it. It's not really worth the company's trouble to pursue this because there's probably no assets behind this entity. So in terms of legal action, I doubt they will bother doing it. This is just the way things are these days in this internet world where you can just publish anything you want and have it stick, even though it's not true.
Discovery Watch with John Kaiser will be right back after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch. We're speaking with John Kaiser. Scandium Mining International was optimistic about receiving a mining lease before the end of the year. Did that happen?
No, it did not happen. They received the important development consent in November, which sets the stage for 3 or 4 more approvals that they need, which take their cue from the development consent. They were racing against the clock because in mid-December, the Australian bureaucrats go on holiday, and they don't really come back from holiday until mid-January. So we have not heard any news, which means that the paperwork and all that is still in process. So now we're in essence waiting until hopefully late January to get news that the mining lease has been granted, which then enables the company to give 30 business day notice for the 20% stakeholders to decide whether they're going to convert to an equity stake or pay their 20% share of the $100 million capital cost. And once that is taken care of, then the company will be working on raising the capital cost for the project. And of course, it is still in ongoing negotiations with various end users with regard to offtake agreements.
John, looking back at 2016, what were some of the highlights for Discovery Watch?
Well, the Scandium International Mining Corp, which is the company in which I own a significant position and which has been a long-running recommendation for Kaiser Research Online, it hit major milestones in this past year. It delivered a positive definitive feasibility study. It got its environmental impact statement filed, and it got a development consent from the New South Wales permitting body. And it is on track to becoming what I believe to be a big success. We have only seen the stock double during the year, and that is a bit of a disappointment. The year was, in fact, dominated by gold's emergence from the gutter starting in late January. We didn't have any January effect this year. The bottom fish list I put out at the end of 2015 was the best one I'd ever done, and everything it managed to lurch lower in the first 3 weeks of the year. But then in the last week of January, as gold started to go up, we had a pretty good rally in the junior resource sector. It was also a good rally in the mining sector in general, which caught the experts by surprise because they figured another year of misery and further bankruptcies in the mining sector before a true turnaround got underway. Now, in sort of May, June, the rally had started to falter, and gold had started to falter, and there was this big psychology of, okay, sell in May and go away. And then we had another big surprise, which was the Brexit decision, where voters were caught, who wanted to stay, were caught napping in bad weather, and that conspired to have a 52% to 48% vote in favor of Great Britain leaving the Eurozone. And that sparked gold to a new high and gave us a summer rally. I mean, normally we never get a summer rally in the junior resource sector. That peaked in mid-August, and gold has been going down since then. The big disappointment was that when Donald Trump won the election on November 8th, gold should have rocketed. But in fact, it didn't. It has tumbled as low as 1130. I believe it's closing out the year at 1150, which is only like $50 above, $50 to $100 above where it started the year at. And this has taken the wind completely out of the sails of the juniors. And it turns out that much of gold's uptrend this year was driven by ETF buying. The GLD ETF added a substantial amount of gold, but since mid-August, it has been losing that gold. So this gold has been coming back into the market. It is paradoxical, given the uncertainty that a Trump administration poses for the world and the United States itself, that gold isn't trending higher. And I think one has to keep in mind that this man is still just president-elect. He is a private citizen telling the Chinese what they can do with American property and all this sort of stuff, an act that may ultimately get him in trouble for possibly breaking a law that forbids a private citizen from advising another country on behalf of its on what it should do with regard to property of the United States. And the other thing is, we did see a strong rally in almost all metals. Ironically, not those that China is dominant in, such as rare earth and tungsten. And these are two sets of metals where if the United States ends up in a geopolitical conflict with China, this is going to be a serious problem. So there is this, again, a paradox. Other metals have gone up, possibly because people are thinking that some sort of infrastructure boom is going to happen under Trump. But the market's not yet taking into consideration the possibility that the world will be plunged into geopolitical conflict that will disrupt supplies of metals from China and from Russia and create a scramble in places like North and South America to secure local supplies in relatively secure jurisdictions of all these metals that require the American economy to keep going. Because a big thing that nobody's really talking too much about is that manufacturing in this globalized world has supply chains that get pieces from everywhere around the world. And at the very upstream end are raw materials which often come predominantly from countries like China and Russia, the primary adversaries for the United States in terms of like who's going to continue to dominate the world.
John, what were some of your disappointments in 2016?
Well, one of the stocks that started off as a bottom fish, Sirius Resources, 7-cent stock last January, it managed to go as high as $1.40. Its Chichu project in central Quebec, south of Eleanor, caught the public's imagination. It looked like it was emerging as a major new discovery. Goldcorp put in money. In fact, they recently added another $600,000 to maintain its 19.9%. However, the 10,000 meters of drilling that the company did, it did not deliver a series of high-grade, medium to high-grade intersections which allowed us to stitch together a zone, an underground mineable zone. We've gone back to a sort of a bulk tonnage scenario where it's going to be, 100, 200 million tons of 0.7, 0.8, maybe 1 gram per ton, which turns it into an optionality play. So the market developed high expectations, thought it had another Eleanor-type discovery on its hands, and the truth machine went to work, and it so far has killed the story unless the northern part of the project has it, and they will return to it. So that was at first a great success, but then it turned into a big disappointment.
John, do you have any hot prospects in the resource sector for the new year?
Well, I think a lot of the companies that we touched on as Discovery Watch, many of them were not even bottom fish. I have warmed up to them. I understand their story. I do think we will get a stronger appetite in the new year as we as people start looking at discovery exploration plays. The weak gold price helps discovery exploration. It also helps companies like Scandium Mining International because there is no Scandium price. It's more a question of, okay, we already have the resource. Let's produce it. Let's find buyers. Let's show the world that, yes, this is available on a reliable basis. And it's immune to whether or not Trump crushes the renewable energy industry, because if we end up with substantially higher oil prices, well, people want their vehicles and planes and trains to be lighter so that they don't cost so much to move. So amongst the exploration juniors, ones like Serengeti Resources, we talked about San Marco. Both of those are Spec Value Hunter recommendations. San Marco in particular is going to, I think, capture the market's imagination. They have one project where they already have a zone, a target, sort of a more grassroots type story, or rethinking an old target. And of course, they've got the Aster-based strategy of generating brand new targets in Sonora State of Mexico. So companies like this that have not yet been through a promotion cycle, where there's still sort of the core backers in it, and where the story can capture the public's imagination, those are going to get traction. Even the Nevada Exploration Inc., in which I also own a significant position with its groundwater-based strategy in Nevada, they spent this year raising enough money to get themselves out of the mess they were in before. They equipped a truck-mounted drill that allows them to collect three-dimensional groundwater samples and even get 6 meters or so of bedrock if it's not too deep. There's going to be definitely rising interest in Nevada gold exploration. So Nevada Exploration Inc., that's going to be one that I think will get a higher profile in 2017. And there's many others that I'm going to be introducing to Discovery Watch and floating on my bottom fish list as the year unfolds. I think it's going to be an exciting year. We haven't had any really big scores in our Discovery Watch juniors so far, but then the market has barely dragged itself out of a gutter of a 5-year bear market that began in 2011. Most of the 800 companies out there that are negative working capital or next to nothing, they're still stranded in limbo land. The regulators are still engaging in their war on investment advisors and brokerage firms financing these juniors. So we still have a serious structural problems on our hands. But we've got about 500 companies that are reasonably financed, decent management teams, and visions for stories going forward. It isn't quite as lucratively cheap as it was at the end of 2015, but you can now really see the companies where there's thinking going on, where management is excited, where we will get the big discovery next year that makes that glass go half full for everybody.
John, all the best for you and your family in the new year.
Jim, you also, and thank you very much.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard. Happy New Year.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.